Today is the 28th of June, Tuesday, 2011, and this video presentation supports the market view analysis on the 27th, focusing on the euro, dollar, and the sterling pound, and more particularly focused on the euro pound cross rate. Lower back to the 75.04 level currently, prompting the euro and the euro sterling to move higher, with a slightly steadier pound working at currently at the 1.6023 with a low of 159.10, which has been quite a support for the sterling pound between the range of 1.5880 to 1.5910 level, and currently at 1.6021, with the euro back to 1.4383 currently, which is right smack on the 21-day moving average of 1.4386, which is giving a slight momentum to continue to move higher on the channel resistance initially at 1.4461, which was the previous high on the 22nd of June. And looking at it here on a slightly bigger formation for the chart, if we look at it on a weekly basis, that particular price level here at the 1.4098 level is right on top of the 38.2 Fibonacci support level, although the trend line here on the trend line support has been penetrated, although because of the give and take between the news on the dollar as well as the Greek crisis that actually prompted the dollar to move lower as well as the euro to move back up initially, although the trend would still be higher with higher bottoms compared to the previous low, and obviously from the previous low of 134.27 and still much higher than the moving average of 135.62. Comparing it with the cross rate here on a daily basis, let's move this here on the left hand side initially, and looking at here, let's try to expand the chart where this particular configuration that we have stated on a technical basis with a moving average at the 0.8864, comparing it with the, let's go back on a daily, right smack on the 1.4110 level equivalent. This formation is called the rising three methods. If you check the candlestick patterns and theories that are being applied although on the previous we did call a double top formation. But however, the idiosyncrasy of the pound compared with the euro, that the particular double top formation and right on top of the moving average, the pound may have the tendency to move back up, which we have stated in our market view report dated the 27th of June. Although in comparison to the momentum here, momentum is slightly lowered compared to the momentum of the euro as a major currency by itself individually, with the Williams percentage rate at a stronger tone, positive, together with the cross rate on the euro pound at these levels. Now, this particular position was taken on the 27th of June, which is basically a hedge from our short position here at the 1.64 level, and a protective limit orders on the way up to be able to cover that particular movement on a short, to be able to maximize the market potential. This was initiated with a long on the cross rate on the euro pound, which actually has a more detailed explanation on our market view report dated again on the 27th, yesterday, during the opening of the European market. Now, with that said, we would like to request for you to focus on the movement of the yen compared with the daily movement of the dollar Swiss. The Swissy is much stronger as far as value is concerned, and it's working at 0.8288 level compared to the working price on the yen, currently at the 80.75, which is actually a contradictory movement between the dollar yen as well as the dollar Swissy. But as far as the cable is concerned, that slight correction higher is much limited compared with how the euro reacted to the report of the approved package plans or budgetary plans for Greece, prompting the euro pound to move much higher, back to the 0.8972 currently, with a high at 0.8979, and it's still working higher. Looking at it now on a weekly basis is actually giving more substantial reason for the prices to continue higher. Let's expand it again, and subsequently even on a monthly basis, where the possible high and the resistance level here, or the resistance line, where 0.9031 is actually the next target level. But if it does penetrate with a stronger momentum, the next level would be back to the 61.8 Fibonacci, which is 0.9145. Although comparing it here with momentum, if momentum would still continue to increase, including the volume and open interest in the futures market, then there is a stronger possibility that on a day-to-day basis, the euro would gain a little more strength compared with the US dollar index, as long as the dollar index would hold above the 75.50 on the closing of the week, then again we would expect 1 to 2 days retracement and volatility increase towards the closing of the week. Now with the cable yen or the sterling yen on a daily basis, the only time that this cross rate would gain more momentum to move higher is when the yen continues to move above the 81 level, where the sterling pound would also try and attempt the next channel at 1.6107 level. Although we may have a slight difference where prices on the sterling or the cable has a tendency to move lower rather than a higher price, just like the euro. Now overall, as far as the market is concerned, this justifies that such configuration on the daily, on a technical basis, the rising three methods thus confirm that the double top formation here was simply a false signal in a short-term corrective move, which is being supported by the euro strength simply because of the fundamental reasons. I hope this would be of help to everyone watching our video presentation, as we have made mention that this supports our June 27th market view analysis, and thank you for watching the video. And have a great trading week ahead.